While most people are chasing AI trends and side hustles, selling stuff on Warp and School, traders have been making money for years, especially Forex traders. And I'm not talking about those luxury lifestyle gurus you see online. I'm talking about real traders. They know how to multiply money with a phone and a plan. So stick with me throughout this video because this is the only guide you need in 2026 to start your trading journey. No fluff, no theory, just what actually matters. Let's go. Forex stands for foreign exchange. It's the most expensive global market in the world, in which currencies are getting bought and sold 24 hours a day, 5 days a week. We're talking about $7.5 trillion traded every day. That's more than the stock market, the real estate market, the crypto market combined. Here's how it works. Every currency is priced against another. Euro versus dollar, dollar versus yen, pound versus dollar. If euro dollar goes from 108 to 109, the euro got stronger, right? And we as traders can bet on either direction. That's the game. Go long if you think a currency is going up, or go short if you think the currency is going down. Two directions, that's it. Well, I mean, sometimes it goes sideways, but we trade two directions. Now let's talk about my favorite pair, which is gold, XAU. And I want to be honest with you about why I focus on gold over any other pair. Gold trends more clearly than any other market. It respects levels, it respects your strategy. It's smoother. When the world gets uncertain, wars, recessions, banking crises, money runs into gold. That's been true for 5,000 years and still is today. When you open a trade, the market moves and we measure those moves in pips. On gold, 1 pip is a 10-cent move per micro lot. When gold moves $100, that's 1,000 pips. Your lot size controls how much each pip is worth for you. A micro lot, that's 0.01. which gives you about $1 per dollar that gold moves. A mini lot gives you $10. A standard lot is $100 per every dollar that gold moves. As a beginner, you start micro. Start small. Protect your account first and scale up later when you're profitable. That's how I did it a few years ago when I deposited my first paycheck into the market. I lost a lot of money, but I started slow, I scaled, I learned, I developed my own strategy. Let's talk about leverage. You don't have much capital and you want to play around with more lots? That's no problem. Brokers give you leverage. Leverage lets you control more money than you actually have in your account balance. With 1 to 100 leverage, a $500 account can control a $50,000 position. This sounds amazing, right? It is, until it isn't. Let's say it's a two-way sword. Leverage amplifies your profits, but amplifies your losses equally. Most beginners blow up their account in the first month because they overuse leverage. Think of it like driving a sports car. The fact that it can reach 200 miles per hour doesn't mean you need to drive 200 miles per hour through town, right? Control your lot size, that's how you control your risk. Before you can place a trade, you need two things: a broker and a platform to execute the trades. Your broker is the middleman between you and the market. You can't trade without one. And having a good broker matters because having a bad broker can ruin good trades before they even start. Let's go over what to look for in a broker. Did you ever wonder how brokers make their money? Here's how. Not by charging you directly, but through something called spread. Spread is the gap between the price you buy and the price you sell. If gold is showing $4,000 for buy and $4,010 for sell, that 10 pip difference is the spread. And it's actually the cost of entering every trade. What you're looking for is brokers with good reputation, good reviews, tight spread on gold, and fast withdrawals. Don't just pick one you sign an online casino ad. If you want to save time, I did my research for years, and I blindfoldedly trust the brokers I trade with, and I will put the links in the description. Feel free to check it out. Okay, so where do you actually place the trades? Me and most traders use a platform called MetaTrader. They also have an app for the phone. Usually after you sign up to your broker, you will get an email with your login details, which you can then put inside MetaTrader. Either MetaTrader 4 or 5, I use 5. And this is the platform used by all professional traders around the world. When you open it, search for XAUUSD in the Market Watch panel on the left. That's gold. Add it to your chart. Right click on the chart, go to time frame. You can customize the chart, change time frames, but usually I do my analysis on TradingView and then just place the trades on MetaTrader. The interface looks intimidating at first. It isn't. Within a week of practicing and playing around, it will all feel natural. Most traders will go and learn support and resistance, head and shoulders, patterns and stuff like that. But I can tell you it's all nonsense. Don't waste your time on these strategies. The way I actually trade and spent years building goes much deeper than that, to what actually moved the markets. I look at liquidity, order flow, price action, New York session manipulation. I look to see where retail traders put their stop loss, to know when it's time to hunt and not be hunted, because those stop losses are obvious liquidity pools. I watch for order flow, not just where price is, but where it's going to move, but how it's moving. Sell side versus buy side. Is it a strong and impulsive move with real intent? Or is it just a slow grind that is about to reverse? The difference changes everything about your entry. Before you build your strategy and learn if it's from me or someone else, you need to master yourself first. Your timing, your psychology, your mentality. Know when it's time to trade and when it's not. Emotions. We all have emotions, right? You can't fully cut them, but you can control how you react to them. Don't bring them to the table. In the financial markets, there are 4 main sessions: Asian, Sydney, London, and New York. There are websites like Baby Pips, which you can convert the time of the sessions to the time of your current location. Most traders usually trade in London and New York because that's where most of the action is happening. I even have a special site strategy only for the New York manipulations that happened every single time. And if you don't know that it's happening, you're just getting stopped out every single time. I go through all of my strategies in detail inside my Telegram channel. Real chart examples, live trades, weekly outlooks. I even have time for some one-on-one mentorships with my team. My channel is free, but there are only 20 spots available each week. Check the link in the bio if there's a spot available now. Here's something that most Forex beginner videos will skip. And it's why people are confused when charts are moving with no technical reason. Gold doesn't just move on technical, it moves on the world. Here are 5 things that also move gold. Pay attention. 1. The US dollar. Gold and dollar usually move in opposite directions. A love-hate relationship. Dollar gets stronger, gold usually drops. Dollar weakens, gold rallies. And this is the most important relationship in the gold market. Number 2, interest rates. When the Federal Reserve raises rates, gold tends to fall. When they cut, rise. Watch every Fed decision. A website I like to look at is forexfactory.com, which you can go to the calendar section and filter to the most important events. 3. Inflation. Gold is the world's oldest inflation hedge. When the cost of living goes up, people buy gold to protect their wealth. Number 4, geopolitical risks. Wars, crisis, uncertainty. Money runs into gold when the world gets nervous. 5. Central bank buying. China, India, Russia. They've been buying gold at record levels in the past 3 years. That creates long-term structural demand. You don't need to be an economist. You just need to keep an eye on these 5 things. And check the economic calendar before you trade. I'm going to tell you something that most beginner videos bury at the end or skip entirely. The reason most traders fail, it's not their strategy, it's their discipline. They get one win and feel invincible. They take a loss, they start chasing, doubling down, looking for a revenge and risking everything to make it all back in one trade. Now that's not trading, that's gambling. And the market will take every dollar from you if you play it that way. The golden rule of risk. Never risk more than 1 or 2% of your account on a single trade. $1,000 account, you risk $10. $10,000, you risk 100. I know it may seem small in the beginning, but that's how you not blow up accounts. And slowly you will scale. In the future, 1% will be 10K for you. Hopefully, I'm rooting for you. So with that being said, it might sound small, but at 1% risk, you would have to lose 100 trades in a row to blow up your account. With a real strategy and risk to reward ratio, that's almost impossible. Of course, let's go back to leverage. Don't overuse leverage because that will just ruin all the risk management. Next is stop loss. Zero negotiations here. Every single trade gets a stop loss. Every single one, no exceptions. A stop loss is basically your emergency brake. If the trade goes wrong, it closes automatically and you move on. Specifically on gold, give your stop loss some room. Gold is volatile, so know where you're placing the stop loss. Place it strategically, and most importantly, know when you enter, because if your entry is wrong, your stop loss will be wrong as well. Risk to reward. The best traders in the world don't win 80% of their trades. They don't have to. If you risk $100 to make $200, you have a 1-to-2 risk to reward ratio. You can be wrong half the time and still be profitable. And that's not motivation, that's math. And once you understand that, the game completely changes. By the way, if you want to watch all these trades in real time with real trade setups on gold every single day, I post everything in my premium Telegram channel, which you can access from the public channel. Just check the pinned message. Signals, chart analysis, market outlooks, completely free. Link in the description below. Okay, back to it. Now it's time for your action plans. You got the foundations now. You know what Forex is. You know why gold is where smart money goes, how to read a chart, what moves the market, and how to protect your capital. Now here's exactly what you're going to do next. Step 1. Open a demo account on TradingView. Practice with zero real money, but put real emotions into it like you're losing real money. Get comfortable with the platform, the charts, the orders. Make your mistakes on paper, not with your life savings. Step 2, open the gold chart every single day. Just the daily chart. Mark your levels, put some notes. What are you seeing? What is the price doing at that point, at this hour, at this session? What happened on this report, on this global event? Look at divergences in SMT between other pairs. Step 3, when you're ready to go live, start small, build your confidence, deposit a few $100s and try to make $50 instead of making 500 or 5K. You're not chasing big money overnight. You're chasing consistent results that will eventually lead for financial freedom. Stack your wins, don't rush the process. And if you don't actually want to spend so much time on charts, on learning the basics, you want to stick to doing what you love but still make money from the markets, then skip all these steps and just join my group to get all the trades on a silver platter. You don't even need to know how to use the platform. I have guides for that as well. And if this video helped you, hit the subscribe button, give me a like, give me a comment. Where are you in your trading journey? What are you going through right now? I would love to hear some stories. I'm going to put out more content, more value to help you guys along your trading journey. So make sure to stick around, follow for more. I wish you luck and success, and I'll see you on the next one.